What happened on Friday is a very significant event because the plunge protection team had to come to the rescue of the financial system by crashing gold, silver, and other prices, because the short positions that these banks have run for so long were actually a threat to the entire financial system.
Hey everyone, my name is Anthony Fatsis and welcome to another episode of the WTFinance podcast. On this podcast, I have the pleasure of welcoming back a very popular guest, Simon Hunt. So Simon, thanks so much for coming back on the podcast.
Well, thank you very much for having me. My pleasure.
No problem. Looking for the conversation. Yeah, we're just joking beforehand that it's been a pretty crazy start to 2026. So I'd really like you, I'd like to start very broad. What are you currently seeing in the economy, markets, geopolitics, everything?
Where do we start? Um, let's start with the economy. I don't think the US economy is anywhere as strong as it's being made out to be. If you take just two simple hard data points, the tracking index according to CAS is down 7.5% year on year. The Michigan Consumer Sentiment Index was down 26%. What you're basically saying is the majority of households are having a rough time. 10% are doing okay. But what happens when and if stock markets have a big correction? I think that is probably starting this month, will last until the third quarter. And if we are right, we will probably see across the world equity markets falling by 20 to 30%. What happened on Friday is a very significant event because the plunge protection team had to come to the rescue of the financial system by crashing gold, silver, and other prices, because the short positions that these banks have run for so long were actually a threat to the entire financial structure. So on the economic side, I think that we are going into a tough 6 to 9 months globally. China's economy is not going to be the propellant for global growth that so many people are making it out to be. America, as I've said, the real economy is not nearly as good as it's being made out to be. And Europe, I think Europe second is going to be in recession by the end of the year. what people are not focusing on is the size of global debt. It's not just government debt, it's households, corporates, financials. And according to the IIF's Global Debt Monitor, taking the last reported data for the first 9 months of the year and annualizing them, global debt amounted to $416 trillion. That powered an economy last year of 111 trillion. So that for every dollar of global growth, you needed $4 of debt. And for America, the numbers are even worse. America had 136.2 trillion of debt for an economy of 30.6, or a reported, I should add, GDP of 30.6. So dear old America needed $4.50 of debt for every $1 of growth. People talk about China's debt being so massive. But if you go into the numbers as reported by the IIF, and remember that China's population is 4 times that of America, so what you actually end up with is that America's per capita debt was over $392,000 last year. China's was $71,000 last year. And then if you look at 2 important subsectors, corporate debt and household debt, it seems on the face of it that China's debt is so much larger than America's. But then if you remember that China has 185 corporates, America only 34, and that China has 516 million households, in America only 135. So on a per corporation basis, America's debt is just over 882,000 per corporation. China's only 200,000. And debt per household in America last year was just over 207,000, but China's just over 30,000. But that's on the financial side. We then have to look at what's going on the geopolitical side, because these developments can easily upset the proverbial optimistic view that financial markets will be on a tear this year. First of all, the 2 big issues at the moment, maybe there will be more others before the end of the year, are, of course, Russia's war against NATO over Ukraine and America's and Israel's threat of striking Iran again. As we look at the Ukrainian war, despite all the discussions that have taken place, apparently the real issue has really not been touched on yet, which is the future security of Russia because of NATO's encroachment towards Russia's border and surrounding Russia with forces in neighboring countries. In 2014, Washington viewed Ukraine as a stepping stone into Russia. Problem is that President Trump wants a quick ceasefire for his own political reasons. But Russia is much more focused, in fact, only focused on its long-term security. So I think that we have a way to go, months to go, before the real issues are negotiated, and will probably only then be negotiated when Russia has secured the territory it wants for its future security in Ukraine. And then they turn to NATO and America and say, these are our terms. So I think this is the way it will end, will be a disappointment to a lot of institutions in Europe and America, because quite clearly Putin is going to command the reconstruction of Ukraine, particularly the territory that it will own. So those contracts will go to Russia, China, India, and other BRICS countries, and not to the West. And that will be not only a disappointment for some large institutions in America, but some will lose a lot of invested funds. Iran is a very delicate issue because whilst President Trump may want, in fact, does want to cause regime change and thus take over the ownership of Iran's oil and natural gas reserves. The problem is that he wants a quick and decisive victory with limited casualties. Iran has stated very clearly that any strike on its country will mean that they will respond to attacks on American military bases throughout the region, as well as shutting down the Hormuz Straits, which are already mined. So it's very easy to shut down the straits. And that they will obviously fire continuous missiles at Israel. My instincts are that it's a 50-50 chance whether there is a strike on Iran soon or whether it's delayed until 2027, 2028. So that's my overview.
Yeah, thanks so much for laying it out. It was as you said, there's a lot happening. If we go to sort of precious metals, gold and silver, um, it does seem like that rally was unsustainable. Apparently the silver ETF volume was higher than the S&P 500 ETF volume. So it does seem like it was maybe just a bit of a mania, um, and that's why we've seen a pullback. But you think it was orchestrated instead?
Well, I think the plunge protection team had to smash prices because the whole financial system was at risk because of the explosive rise in the physical prices for gold and silver. And the big banks have forever been holding big short positions. So it was orchestrated. And this is only the start of a significant correction in an ongoing bull market. I mean, what I've been suggesting to my friends is, knowing this would come, don't sell any physical that you have, but create a cash pile by selling equities so that when the correction is close to finishing its course, you've got ammunition to buy more physical. So that's our view. It's an ongoing bull market, but as all bull markets, you have big corrections.
Okay, so not the end of the bull market, as you said. There's all these other trends in the background.
Yeah.
Okay. No, it's as I said, really interesting, and it has a very volatile couple couple of days. But as you say, it's been orchestrated.
It's only the start of the correction. I emphasize it will probably go on into the middle of the second quarter.
For precious metals or for the whole market?
For precious metals first, and for the whole market, probably into maybe early quarter three. I think you're going to find that it all comes back to the debt issue and the bond markets. Bond market, not only in America but globally, is the Achilles heel of the financial system. And debt will continue to rise unless there is a significant change in government attitudes and central bank attitudes. And you come back to the Treasury having to not only issue new debt, but having to refinance something like $10 trillion of existing bonds over the coming 12 months. They have to bring 10-year Treasury yields down from over 4%, which we think they will do so, to 3% around the middle of this year. What does that mean? It means that monetary policy is going to tighten. That's going to add to an economy which is far weaker than many people are assuming. And if monetary policy tightens, what does that mean for the massive capex that's going into data centers, etc.? That in itself is a crazy boom that is bound to burst. And what are the consequences when it does burst on the rest of the economy?
Yeah, that is the challenge, as you said, that's going to happen, and then from there, that's where precious metals and do you see any other assets benefiting during that situation?
Well, I think if you're looking beyond the very short term, one should be owning physical assets, land, food. Um, Food prices are going to soar. So you need food. If you've got a vegetable garden, make sure it's producing. If you don't have one and you've got a garden, turn it into a vegetable garden.
Yeah, great point. If we go to, as you said, the geopolitical situation with Iran, it seems to be escalating, and then there was obviously the recent Venezuelan uh, impact as well, or I guess you could say operation. Do you see this as the US trying to sort of choke China of its oil suppliers or of its allies, or how are you seeing this strategy? And it sounds like you think the Iranian one will be a bit harder.
Very good question. Um, it's easy to answer, but the implications are less easy to answer. Washington fears China's growth, fears its ability to implement A1 into factories that are entirely run by humanoids. I've forgotten how many there are now in China, something like 130,000. Yeah, big number. What is the implication of that? The implication is that China's manufacturing supply chains already are so efficient and globally competitive that it's difficult for anybody else to compete. But the pace at which they are implementing dark factories, i.e., factories run by humanoids, is pretty alarming. And the implication of that is very sharp reduction in operating costs, which will make China, frankly, nobody else will be able to compete with them, difficult as it is at the moment. So then you've also got, excuse me, China's increasing prowess in the military field. So all of these developments do make Washington very aware that unless China's natural growth can be stopped, then Washington, the American economy, is under cloud. And China is a strong link in the BRICS group of nations. And that is where America's real fear is. Because should BRICS mature, as is likely they will, and will then become a real threat to America's global hegemony. Already they are far advanced in developing an alternative financial system, which is called the unit, which is backed 40% by gold, 60% by member currencies. That is likely to be launched this year. So the attacks on on Venezuela, where China has something like, so I hear, oil contracts valued at around 100 billion, that made China even more aware of Washington's intents. And China made no official statement condemning that attack, condemning the cancellation of those contracts. But instead, President Xi called an emergency meeting of the Standing Committee and devised a 5-point response, all of which will hit American companies in one way or another. So the response, unreported, was very clear to Washington. So you can forget this supposed truce between Beijing and Washington. It's a conflict of interest. So we have arrived at a very pivotal point in our history that we've not seen for 85 years, which is why the next 5-odd years are going to be very turbulent, politically, economically, and in financial markets. Huge swings up and down. How to play them is going to be extremely difficult.
Yeah, really interesting. And there was a recent report that came out that Xi was saying that they want to make the Yuan basically a global currency. Do you see that being aligned with the unit, or do you see that being sort of separate?
No, it's aligned. It's aligned with the unit, because obviously, being the dominant economic partner, the yuan will be the dominant part of member currencies, accounting for 60% of the assets, but unrecognized largely by, or unspoken, I should say, is China's enormous gold reserves. Institutions and households own something like 25,000 tons of gold since the Shanghai Gold Exchange was created in 2002. And government ministries hold around 25,000 tons, accumulated since 1953. And it's shared amongst the ministries, and my guess is the bulk is actually owned by the PLA. So what one is seeing is that the Shanghai Gold Exchange has either completed the building of a gold vault in Hong Kong and one in Saudi Arabia, and is building gold vaults in most BRICS member countries, so that trade between each country is done in their local currency. And if, taking Saudi Arabia, China as example, that Saudi holds more yuan than it needs, it converts those yuans into the equivalent value of gold in the vault in Saudi Arabia. So already you are seeing a diminishing role of the dollar in international finance. That's just going to accelerate. So this comes back to the whole dollar question, which is bound up with the bond question. Because according to Alistair MacLeod, there is approximately $99 trillion held offshore America compared to the approximate $45 trillion of US dollar assets in America. What happens when or if the offshore dollars start being liquidated at a faster pace than is being done now? So we have to link dollar selling into US bond yields. And after the temporary fall that we'll see by the middle of this year, we will probably see 10-year Treasury yields jumping to say 6-7% next year. And in 2028, between 8 and 10%. What does that do to a debt-infested economy? So the bond market is the Achilles heel. And the dollar is the instrument that will cause the Achilles heel to implode.
Yeah, really interesting. So Simon, thanks so much for your time today. We sort of covered so much in such a short period. But my last question is, what is one message you want people to take away from our conversation?
It's the message I give my friends, which is don't chase rainbows. Secure your assets by holding precious metals, land, and food.
Yep, it's a great message. So thanks again. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Either Simon at shss.com or else simon-hunt.com.
Perfect. I'll put that all in the description below, but thanks again for your time.
Thank you for having me. Pleasure.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.